we're going to dive deep into something that could literally save you thousands of dollars on your mortgage. Whether you're ready now or just starting your journey, we're here to walk with you every step of the way. Hey friends, and welcome back to the Purchase Path, where we simplify the road to home ownership one episode at a time. I'm your host, Des Losberg, and I'm founder of Azcension Homes, and we are your trusted home builder here in Arizona. And today, we're going to dive deep into something that could literally save you thousands of dollars on your mortgage. That is interest rate buydowns. Yeah, we'll break down what a temporary and a permanent buydown is. We'll give you examples of how they can impact your payment, and we'll show you how we partner with lenders to structure these incentives into the purchase of specifically an Azcension home. So whether you're shopping for your first home or just trying to make sense of all the financing options that are out there, this episode is for you. All right, so let's talk about what is a buydown. Let's start with the basics. What a buydown is when someone, either you, the seller, or the builder, pays money up front to lower your interest rate. What does a lower interest rate mean to you? It makes your monthly interest payments and monthly payments lower because you pay less interest over the life of the loan. It is cheaper for a period of time, for a shorter period of time, or for even the life of the loan. And there are two main types of buydowns: a temporary buydown and a permanent buydown. So let's talk about each. So let's talk about a temporary buydown. Now, you may have heard it's a 3-2-1 program, a 2-1 program, a 1-0 program. Forget all the numbers. What a temporary buydown is it's a grant or a subsidy or a concession from the seller to pay for your interest rate to be lower in your initial year. So let's make it really, really simple for you. If you qualify for a 7% rate and you do a 1-0 buydown, your introductory rate for that first year is 6%. It's 1% lower than your permanent rate, which is 7%. And it'll be 6% for that first year. Now, what if you do a 2-1 buydown? What does that mean? Well, you get a temporary interest rate for 2 years. And for the first year, your interest rate is 2% lower than your permanent rate. So if you qualify for a 7%, that's right, you get a 5% interest rate for that first year. And for the second year, you get a 6%, and then you move on to your 7%. So with a 2% buydown on your first year, it helps you get a lower payment initially, and then you step up in year 2 and then move into your graduated payment in your year 3. Now it's a 3-2-1 buydown, same concept. If you qualify for 7%, year 1 is 4%, 3% lower. Year 2 is 5%, 2% lower, and then year 3 is 1%, and then you move into your permanent rate. There's all these, it's a convoluted mess. I know there's a lot of numbers getting thrown around here, but what a temporary buydown does for you, the benefits are: one, if you are in a temporary job situation, or you're looking to get a raise, or you're looking to eliminate debt, it's a great introductory way to keep your payment low initially, and that way you can step up into the higher payment when it becomes more affordable. 2, it buys you time. So if you are qualified for a lower initial rate at a lower interest rate and lower payment, it buys you time to be able to refinance. So we don't expect rates to stay this high forever. We had them. I've been in the business for 22 years. I was in the business in 2021 and 2022 when interest rates were in below 3%. And so I know interest rates are eventually going to come down from where they're at now. Right now, they're hovering in the 6 to 7% range. And I know it's a great way to get your initial interest rate lower, because rates will come down and then you could refinance later. So you can buy time for either A, fixing your credit, or paying down debt, or maybe you get a promotion or an increase in income. And it's a great way to get your initial monthly payment lower than in a lot of cases what you pay in rent. So let's use real numbers. What does this look like on a $250,000 payment? If you put 0% down, yes, I know 0% down, they are available. Let's break it down. At 7%, which is your standard rate, if you were just to buy a home at $250,000 at 7%, your principal and interest payment would be $1,663 a month. That's $1,663. So if you did a 2-1 buy down, in year one, your interest rate will be 5%, and that'll lower your first year payment down to $1,342, $1,342. That is $320 less than what you pay permanently after year 3. At year 2, your rate does go up to 6%, so it'll jump up to $1,498. And then year 3 and beyond, it'd be at that $1,663 and beyond. And so for those first 2 years, that is over $7,000 saved and put back into your pocket in the first 2 years alone. And it buys you time. And if interest rates come lower, you can refinance out, and it gives you all the opportunity to maximize your savings, save up, fix your credit, wait for that job change or income increase, and then it becomes more affordable. And the best part is we can negotiate with the lender, and we work with specific lenders who work with our contracts, work with our homes, and we will provide you the concession to be able to do these temporary buy downs. For example, a qualifying rate in today's market as of July of 2025 is right around 5.99% for an FHA loan. If we did a 2-1 buy down, your first year interest rate is 3.99%. That's right. I calculated out on a $250,000 purchase, your total payment with taxes, insurance, mortgage insurance, everything on that first year, if we bought your rate down temporarily to 3.99 and we could structure it that way, would be about $1,550 a month. Yes, that's right. $1,550 a month. Most rent is around $1,800 a month. Your mortgage payment will be $200 less per month, and you own the home. It really helps buyers ease into the payments while your wages catch up, your expenses settle, and rates potentially drop, and you refinance out. But most importantly, you're building equity, you own the home, you're not paying someone else's mortgage, and you're not making your landlord rich, and you have that pride of ownership. Now let's transition into a permanent buy down. And permanent is exactly what it sounds like. You're not temporarily buying the interest rate down for the first year or the second year. It's a permanent interest rate reduction for the life of the loan. The benefit of that is peace of mind and stability. And that's where permanent buy downs really come in. So if you or someone else, like the seller or builder, pays a lump sum at closing to permanently buy down your interest rate, you don't have to worry about the temporary interest rate. You don't have to worry about the predictability of interest rates going up and down, paying off debt, or wages to increase, and have that peace of mind that you have a set payment for the life of the loan, regardless of what happens. Now, there is some cost to that, of course. You don't get a huge discount like you would on the temporary buy down. On the temporary buy down, you can buy it 2-3% on the temp buy downs. On a permanent buy down for the same cost, you're only buying it down for about 0.25% to maybe 0.5% cost from what you qualify for initially. So for example, if you qualify for 7%, you can maybe permanently buy it down for the same cost around 6.5%, maybe 6.25%, somewhere right around there. It's not going to be a huge and substantial buy down like you would see on these temporaries. So let's talk about the points and what the costs are. So you, the buyer, if you want to keep your purchase price lower, you can pay for it up front. What are points? Points is a percentage. So if you buy a home where your loan is $250,000 and you pay 1 point, that is 1% of that loan amount. That is $2,500, and that'll buy your rate down either permanently or temporarily, however you'd like. Or you can have the builder or the seller buy it down for you, or concede, or give you a concession, or give you a closing cost credit to do that for you. That's, if you buy it down 1%, you drop your payment from $1,663 a month to $1,580. That's about $83 a month or $1,000 a year. And trust me, when you buy a home, you're going to want to buy furniture, you're going to have new utility bills that you haven't experienced before. So you will want to maximize your savings. It takes about 2.5 years to break even on that cost, but you can either negotiate with the builder, and we do that here at Azcension, or you can pay for it or have the seller pay for it depending on the home you buy. So if you plan on staying in your home long-term, it's a smart investment, especially if you like having the peace of mind of having that low payment over time. Finally, let's talk about how we do it here at Azcension. How do we structure buy downs here at Azcension Homes? So we're all about building quality homes for working class families, for veterans. We get it, but we can structure and cater the contract to pay for your interest rate buydowns, temporary buydowns, and closing costs. We serve real families, and that's a part of the purchase path. We take steps necessary to educate you and also structure our own deals to make sure you can afford the home. And we partner with the right lending partners who are focused on first-time home buyers, focused on veterans. We have a smaller local lending team who are here to help you with your needs. On select homes, we offer closing cost credits where we can structure a temporary buydown, either a 2-1 or a 1-0 or a permanent buydown, whatever you'd like. We work directly with the lender and directly with you to make sure it's structured correctly to maximize your payment savings and get it as low as possible, because we want our homes to be affordable for you. So which buydowns are right for you? Let's do a quick recap. If you're buying now and expecting credit to be paid down or your income to increase or rates to come down and you're going to plan on refinancing later, a temporary buydown makes the most sense. If you worry at night and you can't sleep and you just want that peace of mind of knowing that your payment is a set amount for the however long it takes, whether it's 25 years, 30 years, 20 years, you want that peace of mind, then the permanent buydown is right for you. But either way, these tools can shave years off your financial stress and will help you figure out what is the right path for you. So if you've been waiting on the sidelines, hoping for rates to drop or prices to fall, you might already have your solution. So you don't need that perfect timing. You just need the right structure. You need to work with the right team, and that's what we do best here at Azcension. And if you're interested in one of our available homes or you want to talk through which buydown is right for you, let's get you connected with our lending partner. So shoot us an email at team@azcensionhomes.com. That's AZCENSION homes.com. Connect with us on Instagram, Facebook, or follow this podcast. Share it with someone who's on their own purchase path. And if you haven't already, join our newsletter at azcensionhomes.com. Just go to our website and find more information there. So thanks for listening to The Purchase Path. I'm Des Losberg, and I look forward to catching you next time where we simplify the road to homeownership one episode at a time. Take care. The cost of living has pushed too many families out of the communities they love. They work hard, but still can't afford enough space. Rent keeps rising and home ownership feels like a distant dream. That's where the purchase path comes in. I'm Des Losberg, founder of Azcension Homes, and I retired after 22 years in the lending industry after I kept seeing the same pattern. Good, hardworking families getting locked out, not because they didn't deserve a home, but because no one ever showed them a real way forward. This podcast exists to change that. Here you'll learn about real paths to ownership like zero down financing options, down payment grants, lease to own programs, and financing options that are actually designed for families like yours. This isn't about fluffy dreams or get rich quick advice. It's about clarity, options, strategy. So whether you're relocating, renting, or just tired of waiting, you'll get the tools and the truth to move forward one step at a time. Follow The Purchase Path now on Spotify, Apple, or wherever you listen and start your journey with Azcension Homes. Your path, your purchase, your time.